MPC decision out today. Analyst polls are expecting the rate to be cut, but we have the IMF on the other hand suggesting that the rate should stay on hold. Which camp are you sitting on?
Looking at the key factors that are, both the analysts and the IMF actually suggesting, I'm actually going to go with the IMF in terms of, sustaining the rate at the current 18%, because in as much as the strict monetary physical policy that's been able to be implemented in the last few months has started working, you're seeing reduction in inflation. A few other fundamental factors that are actually affecting the macroeconomic issues are yet to be dealt with. And when looking at, though maintaining the rate at 18% is going to affect the issue of consumer purchase power and the aspect of lending in the sector, we see that continuing sustaining at 18% has a better chance on actually fixing a few issues that are needed before it can actually be reduced, because the only thing that central bank MPC is going to have in terms of having a good fundamental reason to reduce is the fact that our inflation has gone down, which in my view is not good enough to actually reduce the rate. So I'll go with IMF in terms of supporting that the rate be held at 18 for the moment.
The rate held at 18, you did touch on that consumers are feeling the pinch. We did have the construction sector also coming out and saying that they are feeling the pinch on those high borrowing costs and are seeing somewhat of a slowdown.
True. We're seeing the construction sector actually being hit hard in terms of borrowing, and just not them alone. We're looking at the SME industry in the country. Lack of access to credit facilities has actually slowed down business growth by a whopping 37% in terms of business growth. We are seeing purchase power has dropped significantly, especially for the middle class. So we're seeing that holding the rate at 18% has negative implications on the short-term economy. But I think what the MPC and the central bank actually looking at are long-term issues, especially on the macroeconomic aspects, whereby they need to fix long-term issues so that when they reduce the rate, then we can have a sustainable aspect in terms of ensuring that we have a single digit in terms of inflation. Consumer price index issues are handled, because in as much as we're looking at inflation going down to 10.5%, we're still seeing that the CPI issues are not yet resolved. Food prices, fuel prices are still high. So the issues are short-term vis-a-vis long-term, and who wins. And given the fact that IMF has a huge significant influence on development partners and our funders, I'm thinking likely central bank and the MPC will actually side with them.
We'll wait and see what the central bank does on that front later on today. But bringing it back to the local equities market, we are seeing the NSE 20 heading towards that 3,800 points mark, with foreign investors really coming to the market quite heavily.
True. We're seeing increasing foreign participation in actually key stocks. We're looking at BAT, EABL, Barclays, we're looking at KenolKobil, we're looking at Safaricom. Unfortunately, local investors actually shying away. This is due to a myriad of factors: political uncertainty, lack of proper investor education on how to look at a stock in terms of investing. The interesting thing is foreign investors have access to a lot of information and they're able to tell which stock to look at in terms of fundamentals. When you look at the counters that are actually enjoying a lot of foreign participation, are key counters that are a lot of key heavy fundamental aspects and have long-term huge yield return in terms of dividend. So you're seeing that in the coming months, as we near elections for the country into a new era of administration, we're seeing that the market could more or less be controlled at least 77% by foreign participation.
Looking at KenolKobil, you did touch on it a bit, that it's receiving quite a lot of foreign interest. We have seen the stock reaching levels of about over 3 years. A bit of volatility has come through on the stock. What are you making of the whole deal, of the whole Puma issue and KenolKobil, and what some of the fundamentals that are playing out there?
The energy sector in the country is actually going through a very interesting phase with the country discovering a lot of oil fields all over the place. And we're seeing that with the interest of Puma Energy into KenolKobil has seen the price rise more than, the highest in 3 years, in 3 years, from a low as 12 shillings to a high of 16.85. And we're seeing that there's a lot of speculation around what Puma's takeover price will be. And many analysts are actually, between 18 to 24 shillings. However, the interesting issue is we're seeing that majority shareholders will have the interest taken care of. But what will happen to the minority? Because at the end of the day, policy and legislation actually states that once once a company has taken over, then the issues of the minority need to be considered. And I think this is what's holding back Puma in terms of being able to announce its price, because we thought by now the price will have been announced, at least a talk over, because we've seen as of yesterday the price had gone at least 18.7. I mean 16.7, but it's reduced now to 15. So we're still waiting to see, because at the end of the day, Capital Markets Authority had suspended the trading of the shares on the market for 2 weeks, and then, without any information, started trading again. So there's a lot of information that's not really out there yet, but we're hoping that by the end of the week, some information can be out.